Hello everyone and welcome back to Sudden Wealth. I hope you guys are doing very well. If you do enjoy the content, drop that like and subscribe. It greatly helps the channel. Today it may be one of the most important videos that I've made, and it's going to be longer than usual. So I do hope that you guys can also do your part and drop that like and share with anybody that you feel should listen to this. But I wanted to give you a little bit of a background, or beyond the scenes, if you will, or behind the scenes of what happens here in the channel. So, I have a full-time job and I have a family that I need to tend to, and I don't have time to, to come up with the extraordinary content in the sense of, having a super produced video and all of these kind of things. The reality of how it goes is I think of a topic right before I record, I press record, I save it, I upload it. That's the end of it. That's it. No takes, no tryouts, no rehearsing, nothing. It is straight, as you hear from the source, is what you get. And the reason why I do it, it's because I think, a little bit of modesty apart, one of the greatest skills that I've developed also in my line of work is the ability to always focus on the forest and not so much on the tree. You see, the issue that we have is, as we become specialists on anything, we tend to give importance to details that other people don't. And we end up getting lost in those details and losing the bigger picture. And it happens with everybody in any subject, as long as they have some sort of expertise around it. Now, my presentation is not the most appealing for YouTube viewers. However, I'm very proud to have a community of 1,400 people with a like to dislike ratio of 94% plus, because they saw beyond the mask, the not so produced videos. And in the beginning, I get it. You get it. Oh my God, this guy, here's a random guy with a mask talking about, crypto and the markets and so on. But then as soon as things like, when everybody's predicting a depression or a great stock market crash, and I'm saying new all-time highs in the US stock market before Q1 2024, and then that happens, or when I'm saying higher for longer is better for markets rather than cutting right ahead, and then higher for longer becomes a famous wording in the business world, right? When I say things like, oh, maybe a top signal for the next cycle will be countries adopting Bitcoin the same way that El Salvador did. And if you want a super cycle, that would be a country like the US. So when I start to say certain things and this end up happening, people would actually give me more praise over time, particularly the one I would say when everybody in March of this year was predicting Bitcoin 100K. And I was saying, no, you're going to have a sell-off of up to 3 months on Bitcoin, and we can go somewhere between 47, 52,000. We went to 52.9, which technically is wrong, but compared to people predicting 100K, it's orders of magnitude more accurate. And the reason why I'm making this video is, once again, I'm going to step away from looking at the tree and looking at the forest. Now, we all know what's going to happen in November. We're going to have the US election. And obviously, getting Trump elected for crypto purposes is much more bullish than any of the Democrats, even if it's Joe Biden or anybody else. Now, when I say it's much more bullish, is you need to understand something. In my view, at the end of the day, it won't really matter. The question is, Democrats, we continue on the cycle. Republicans, particularly Trump, we go through the cycle on steroids. So that's the difference. So the liquidity cycle is the same. The pumps will also happen. It just depends on in what scale. So with Trump, it will be much more aggressive, in my view, to the upside, rather than with the Democrats. But with the Democrats, we're still gonna do very well. So it's important to have this idea. In my view, if the Democrats end up being elected, does it mean that it's the end for crypto? No, it's not. It's the end for crypto this cycle on steroids. That's the difference. You see, people also forget it was with the Democratic presidency that we got the ETFs, for example, right? So now I'm seeing too much rhetoric about that Trump really needs to be elected. In my view, yes, it will be very helpful. There's no question about it. And to be honest, but for the overall global crypto world, it doesn't make that much difference, particularly if you strap it out over the next, let's say, 10 years. The big difference will be actually for Americans. So for people who live in America, because if you get the Democrats, you most likely will end up not being able to have self-custody, which is terrible for the US. Most likely you're going to have a secondary role in terms of innovation, which means innovation will go to places like Hong Kong. China just unbanned crypto, Singapore, the UAE, parts of Europe, South Korea. So the innovation will just shift someplace else. So this election, from a crypto standpoint, is actually more important for Americans in specific rather than the crypto world in general. So I wanted to make that very clear. I'm not predicting that if by any chance Trump doesn't win, that all of a sudden the crypto will collapse forever and that's the end of it. No, it will still exist. Why? Because it's based on liquidity cycles. Now we are transitioning from the liquidity spring side of the cycle into the liquidity summer, which means that the bull market is progressing and we are slowly going to enter throughout late 2024 and early 2025 into the euphoria area. And then euphoria will last, at this stage is difficult to say, but most likely the crypto top will only come somewhere between Q2, Q3 2025. I get the feeling most likely Q3 2025. When I say the top, I'm not talking about the top about everything. So usually Bitcoin tops first, Ethereum second, and then the altcoins have another 7 to 10 days to run. And that's it. Then then it goes away. For a while, most likely my prediction for the next bear market, for the next bear market, is that most likely Bitcoin will drop up to 65%, but no longer the 85s or 75% anymore. That's my feeling. Now, and this is the very important part of this video that I wanted you to understand. So to be clear, doesn't matter if it's a Democratic president or Republican. It matters in the sense of, are we going to have a cycle on steroids or not? But that doesn't mean that the cycle will be stopped with any of them. So I guess now people have a complete understanding of my position. Then, you see, in 2008 was our 1929 period in the US. Okay, so we had a similar crash that was going to delve into something much worse if we didn't start what we have today, which is an active currency debasement. That means that basically the trade is we have too many debt outstanding on the planet, and we have two options. Either we do it Great Depression style, which basically cost 25% unemployment, people got annihilated left and right, you had food lines, you had all of this, but it would be even worse now, because during 1929 you didn't have a real estate bubble because you had to pay for houses 50% upfront, so you could not really create massive bubbles in real estate. But in 2008, it would be real estate as well. So you would have millions upon millions of people on the street. You would have banks closing down and people losing their savings and people losing their money in the bank. You had 25, 30, 35% unemployment. So that was what we would have seen if we had left things go on its normal way. So we made the decision, I say we, in particularly the West, and then the rest of the world followed, the ones that can, the ones which currency is strong enough that can do this, we said no more debt defaults. We are going to print whatever we need to print to prevent that from happening. Now, for the purists like Peter Schiff, they thought that by printing all that money, inflation was going to follow. And they forgot one thing. Inflation only follows if the increase in money supply is matched with velocity of money. That means money trading between people. But if the banks are the gatekeepers, if the banks decide if you get a loan or not, then the benefits from that only go to the top 20% of the population, because I've said this many times before. If you go to a bank and say, oh, interest rates are 0%, can you give me a 100K loan? The bank will tell you, no. You have 2 mortgages, you have 1 personal loan, you have credit card debt, you have student loan debt, and you have 2 payments on your car. You don't. But Elon Musk can get 100 million euros, $100 million tomorrow, and at 1% rate, in which he will use it to buy assets. So asset prices go up, but if you go to the supermarket, prices are the same. So that's the game that we're playing. We inflate the currency, and when I say inflate, I mean debase the currency on average 8% per year. So that is the asset prices. That is reflected when you buy stocks. When you buy real estate, you see 8% more expensive. Then you have the inflation, the CPI style inflation, which is you go to a supermarket and things cost more. Now, in that environment, you have 3 options. Commodities haven't done so well. Gold has been complete garbage because gold cannot even keep up with the CPI side of inflation, let alone the money supply one. Okay, what about stocks? Yeah, stocks has been a good place to be because you stay pretty much in the same place. Real estate, same thing, but then real estate has other problems. You cannot transport it, you need to pay property taxes, need to pay maintenance, blah, blah, blah. So all of a sudden, those costs can go out of hand. Then you have tech stocks, which has returned about 17% per year. And then you have Bitcoin, which has done 150% per year, including those big crashes in the crypto cycle. Now, for people to understand, and this is purely my opinion, so this is not financial advice, this is how I see it, is in 2008, the Fed and the other central banks took the risk out of the stock market. They took the risk out of defaults in major scales. Of course, you can have individual stocks that go bankrupt. Of course, you can have sell-offs of 20, 25%, but we are all now moving in connection with the liquidity cycle, which tends to increase during election and post-US election, and then it decreases a bit afterwards. That's when you have typically the bear markets or the sell-offs of 10, 15% corrections, and then you start all over again. So it matches perfectly with the US election cycle and the liquidity cycle. They match very, very well. This means that although the money supply increases on average 8% per year, you have periods where it doesn't go anywhere, and you have periods where it jumps 16, 20, 25%. And that only means that you're creating more currency, which means you are taking the value out of the currency most of the times to buy assets, which is the currency debasement part of 8% per year on average that I've discussed. Now, what that means is that's the trade-off you're making. You're not having a 1929 style Great Depression, but you're paying a premium of 8% per year. If you ignore the CPI inflation, obviously in the past few years, that has been a big component because we had inflation compounded of more than 20%. So there you go. You got another fifth loss of value on the currency in the span of 3 years. That you also have those time periods in the 70s, for example, you had the big gap up in inflation, so you devalued it quite a bit during that time frame, and now you can, and then it stabilized afterwards. Now you have, so this is the trade-off that the central banks have decided. We're not going to have a Great Depression style of thing, and maybe that was good. I mean, it's like we think about these things very locally. People forget that the Great Depression was the great precursor in Europe for a certain man with a mustache to be elected in Germany. So what I'm saying is something that happened in the US in 1929 led to the election of someone in another part of the planet that ended up throwing the entire world into a conflict that started in 1939 and ended in 1945. What I'm trying to say is that when these purists, these Austrian purists in terms of economy, come up with these kind of solutions of just let everything fail and collapse, you need to understand that this causes unintended consequences that can be dramatically far worse than paying a premium of 8% per year. Now, once we understand this part, you understand that all risk assets are connected by the same principle, liquidity. Because crypto, as the real crypto, as defined rules, is a new industry and is way smaller, it goes up more than everything else. But the other things also go up. They just don't go up as much. As long as you wait for a certain period of time, even gold is making new all-time highs nominally, if you forget about inflation and currency debasement. If you just look at number, it's now higher than it was in 2011. Although if you adjust it for inflation, it's lower, and if you adjust it for currency debasement, it's dramatically lower. But looking just number for number, it's the same. So now here comes the question. So that's why once I've analyzed this and I've understood this, I went 100% on crypto. I'm all in crypto. I don't have stocks or real estate. I mean, I have real estate, but once again, I got it in the very special condition. I bought my house, which has a less than 2% interest rate for 20-year fixed, and I bought it extremely cheap because the person that was selling it didn't want a real estate agent because they didn't want the commission. They didn't want to pay commission. So he ended up selling it to me much cheaper than what he could have gotten if he had a real estate agent. But you see, this is a bunch of, lucky things. Lucky. I mean, I was just lucky that conspired in my favor for me to get a great deal on a house. But it's not something you can replicate 1,000 times. You see the point? It was for sure you can get great deals in real estate in any part of the world, but you need to understand it becomes almost impossible at some point to do it. So crypto, in my view, is the most painless, and painless when I say in terms of getting loans. I don't need to get loans for crypto, right? Was to me, I came to that conclusion. Now, you can come to a very different conclusion. Maybe you completely disagree with me. That's fine. I'm not here trying to influence you to do nothing. I'm here telling you what I've witnessed and how I interpreted what I've seen. Okay? My view, my opinion, not God's word. Okay? So to me, it only makes sense to be invested in crypto as long as the system remains as it is. Now, of course, this creates a lot of tensions. And when I say tensions, that leads to elections of people like controversial figures. I mean, it's controversial, like Trump. But if you look at Europe as well, you look who won the election in the Netherlands, you look who is running Italy, you look at who almost won the elections in France. Spain is swapping between extremist parties from one side to the other. You look at Portugal, and you have also young parties that are very, let's call it controversial, getting a lot of popularity. You see Bolsonaro winning in Brazil at the time. You see who won in Argentina. So those are all consequences of something being not quite right, but people not being able to put the finger on exactly what is not going that right. Now, with this, you come to three potential outcomes. And this is where I don't know what's going to happen. Nobody can tell what's going to happen, but I can see what the hopes for are. So option number one, we keep on doing this. Stocks keep going higher, crypto keeps going higher, real estate keeps going higher until only very few people can own all the real estate in particular, and less people will be able to have meaningful positions in stocks. So basically, if you're an old school guy who owns a lot of stocks from the past, you'll do incredibly well. If you're a new person trying to invest, you'll struggle quite a bit. So that's option number one, and that's what Davos people, the World Economic Forum, the elites want. They've told you, by 2030, you will own nothing and you'll be happy. This is a quote. So this is where some people see things going. Very small percentage of people will own everything, and you won't own, and particularly new people or young people will not own anything, and they will be happy to do so. So now you're seeing sharing cars, car sharing. You see more and more rentals in terms of apartments and houses. You see more and more everything is shared and leased. You can rent a small bike all automatically when you're in a new city. You can do this and that and the other, and it's all about that feeling. Now, is that good or bad? I don't know. Depends. I mean, to me, it would be horrible. But I mean, for young people, if you only live seeing rentals, right? Would you really mind? I mean, I don't know. I don't have the answer. See, this is what I struggle with people like Harry Dent and Peter Schiff. There's a lot of things which you cannot know. But then they speak with so much arrogance, and then their track record is so pitiful, is so bad. But yet they speak with so much arrogance. Yeah, once again, because they don't make their money on the market. They make their money selling you funds, selling you newsletters, YouTube ad revenue, going to television and talk, going to podcasts and talk. I mean, this is how they make their money. They don't make their money by investing. Although they give investment advice, which to me it's completely crazy, but that's besides the point here. So option number one is we keep on doing this, and less people own everything. People live more and more about rentals and sharing and all of these things. And if everybody is okay with it, then I mean, you can still own things, you can still buy things, but it will be incredibly harder. Option number two is we keep on doing this, and somehow there's something in the system, let's say on the derivative side, for example, with quadrillions and quadrillions of dollars in derivatives, that something blows up there that we were not expecting, and we cannot print money fast enough to stop the bleeding and the blow-offs on the economy and the massive defaults all at once. Now, I see this one extremely unlikely, because you've already had several central banks that said they will print unlimited amounts of money. So the only thing that they need to do, change the way that you treat certain items in accounting. You print as much money as you need to, and you stop the bleed right there. Then option number three, which is the one that I hope for, I'm not saying it's going to happen, but it's the one that I hope for, it's innovation and growth outpace all the problems created by too much debt. Now, you need four things for an economy to succeed over time. You need population, innovation, cost of capital, and energy to succeed. Population. With AI and robots, you have infinite population. Amazon had 250,000 robots a few years ago. Now it has 750,000. And I think by as early as next year, they will have more robots working than people. And those robots are 3 to 10 times more productive than a person. So infinite population, together with innovation and the low cost of capital, you have productivity that explodes. And when productivity explodes, growth explodes. And when growth explodes, if it explodes further than the debt is created, you can deal with having high numbers of debt. But if your productivity is so high, which is a potential with AI and robotics, that all these messed up developments in the debt cycles that we've experienced will be neutralized. And finally, energy. You see, people think that Europe is completely crazy by deploying massive amounts of money into green energy. Now, the reason why they do it is because in a world increasingly more digital and AI-based and all of this, electricity will be massively, increasingly more important. What is the problem of Europe? It's a poor continent in terms of resources. We don't have, compared to other continents, we have very low oil and gas reserves. So we need the renewable push to bring the cost of capital down so we can make electricity generation very cheap. I'll give you the example of solar energy. Solar used to be prohibitively expensive. Nowadays, it's extremely cheap. It's extremely affordable to build. In the past, it was very without subsidies, massive subsidies, and all of this was impossible to have any kind of profitable solar deal. But now you do. Wind was the same thing. Wind is now, many projects are financed in Europe and they're completely subsidy free, and the cost is a fraction of what it used to be, and it's green energy. Why is it important to be green? Very simple, because we do not have, comparably speaking to other continents, meaningful oil and gas reserves. So you need to catch what you want. Iceland is 99% renewable already, 80% hydro, 20% geothermal. Portugal, I think, was something like 90% of the electricity is now renewable. Spain is, I think, 85%, and so on and so forth. So we are moving into that direction. Then you have the smaller countries, like the Netherlands, for example, which has announced that they will build new nuclear reactors. Why? Because it's a small country. They don't have the scale and the size to build massive, and the resources, by the way. There's almost no sun in the Netherlands, and the wind is not that great as well. So nuclear is a good option for a country like the Netherlands in order to produce electricity. But these four things are the key: energy, cost of capital, people, and innovation. When you have AI serves three of these four things, and it's powered up by electricity. So if electricity drops by, let's say, 80% over the next 5 years, and you have AI, and robots, which is pretty much infinite population, innovation at its peak, driven by AI, and the cost of capital coming down because of all the investments and the technological developments made in the past, you have tremendous growth. When I say tremendous growth, is unprecedented growth. Now, this is the idea. So these are the three options. Obviously, this last option would be the best one for everyone, and then maybe literally having that 8% currency debasement per year looks like a good alternative versus what could have potentially arisen from a second and worse Great Depression in 2008 if central banks would have let it to happen. Now, these are the three options. Which one will succeed? I don't know. Which one I hope to succeed is the last one, and it seems that we are progressing well into that direction. But it's impossible for me to say with great certainty what's going to happen. However, I now know that in any of these cases, for the time being, it's all about liquidity cycle. So I'm focusing on what I can control. So that's why I have my money placed in crypto, because I do believe that that's the best way to success. Will I be correct? I don't know. I hope so. I guess we'll find out by Q3 or, let's call it 2025 has always been my target. Okay, let's say by 31st December 2025, we will find out if I was successful or not. And to finalize, this is the important part. You see, the top 1%, or the very rich people, the millionaires, the billionaires, they, for the most part, don't cheat anybody. They just understand exactly how the system works and exactly what I've just described, and they act upon it. The knowledge and the rules are out there for all of us. But most of us, unfortunately, are more concerned about watching the next movie or watch the next, season that's going to come out of any reality show than actually delve into all these things and learn how things have changed, what is the best way to be positioned, while very wealthy people actually take that effort. So I want to give you, for example, my example. I am a middle-class guy. If everything goes as according to plan, as I believe, I will be retired and a millionaire next year. If that happens, now let's assume that happens, who did I oppress? Who did I exploit? Couldn't anybody in the middle class, for example, do exactly what I did? Everybody could have done it. Everybody could have followed, not me, but, understand what's happening to the world, come to their own conclusions, make their own decisions, And maybe they could have also retired. But the point is, if I retire next year, who did I rob it from? Who did I oppress? Who did I cheat? I didn't cheat anybody. You see what I mean? I just understood how the game is played. I understand why the cycles behave in the way they behave, and I acted upon it accordingly in order to, maximize the best outcome to me. But that's it. But you see, this is the problem: is when things are not going in a specific direction, and it's not very easy to understand why that's the case. It's much easier to look at a small percentage of the population over there with all the success that you always wanted and say that they are cheating you somehow and they are robbing it from you somehow. I'm not in favor of that. I'm always in favor of focus on what you can control, focus on the forest, not the tree, position for the most likely outcome based on your analysis, and keep that strategy unless you get very strong reasons to feel otherwise. And I always focus on what I can do rather than how I wished and hoped and felt that the world should be. And with that, guys, thank you very much. I apologize for the longer video, but I thought we were covering a lot of interesting things here. And yeah, I wish you a very good start of the week, and I'll catch you in the next one. Don't forget, drop that like and subscribe and share with anybody if you feel that there's some valuable information over here. Thank you very much, and I'll catch you in the next one.